Hey, Matt, the mortgage guy here. Want to record a quick video talking about why does my pre-approval amount vary when it's a condo versus a single-family residence. And also in this video, I'll probably touch on pros and cons of a condo versus single-family residence, what you want to consider when you're looking between the two. As home prices continue to increase, I know a lot of people that feel like they get priced out of some of the single family homes in the neighborhoods they want to live in, start to look at condos. And so these are some of the things that you should probably consider if you're going to buy a single family residence or a condo, pros and cons of both. So first and foremost, this is a common question I want to put a video out on so that I can help people out when they tell me, hey, Matt, you told me I was pre-approved to buy up to $800,000, putting 10% down. But then when I told you I was looking at a condo, you told me it would likely be less. And here's a visual. I think it helps to see a visual. At least it helps me. So you see exactly why. So in this scenario where Henry and Heidi homebuyer were pre-approved up to $800,000, qualifying is based on your income, your current debts, and the mortgage. So let's say in this circumstance, the mortgage that gets plugged into this calculation can't exceed $4,000. Now, if you look on this row for the single family residence, when you're putting 10% down, you've got the property taxes, you've got homeowners insurance, you've got mortgage insurance, and then there's no HOA for the single family. And this total payment is $39.44. Now, when you buy a condo, you have to take into account this homeowners association. And I did a little bit of research because I know in many HOA associations in California, you can get $300, $400, $500 HOAs. And maybe this is less. Maybe it's $290. Maybe it's $320. But by factoring in this big HOA payment, you're not going to qualify for as much because, as you can see, 710 purchase with this HOA, this is a real life scenario, the payment is more than $800,000 purchase of a single family, which doesn't have that HOA. A couple things to look at. Your homeowner's insurance is going to be less when you buy a condo because you only need a certain type of insurance that's walls in insurance. The homeowners association is going to cover everything on the exterior. And so you're just insuring what's inside the walls. And so they call it walls in policy. Might be half of what a policy is on a single family residence in the same price range. But, that's the only place where you're really going to save. These tax numbers are different because this is a smaller purchase price. But homeowners insurance is cheaper on a condo, but not nearly enough to make up this big difference in what you're going to pay on an HOA. And maybe, this HOA is only $340. Then you can probably go to, let's call it $730 and still be in the same monthly payment range. But nonetheless, you're always going to qualify for less buying a condo because of that HOA. And let's look at this just for fun. I looked up like the 10 metros with the highest HOA fees. And this is from years ago, but I'm sure it's still true. New York City has got some humongous HOAs. But look, we've got 5 of the top 10 are California: Riverside, San Francisco, San Diego, San Jose, LA. And really, I guarantee you, this has doubled in the last 6 years. This specific scenario that I'm looking at is down south, and I think it was 438 before I made those changes. From this 453 from the clients that I had put together these scenarios for, which I obviously changed the name and whatnot. So those are the numbers behind it. Now, just my opinion, what you want to look at is when homes appreciate, they appreciate at a different pace than condos. And when homes depreciate, if you get into a market where prices are depreciating, condos and homes depreciate at different rates too. And in the market we're in right now, where things are going crazy and things are increasing like crazy, condo prices are increasing like crazy. When prices start to fall, I believe that condos fall faster, and condo prices really, suffer. One thing I'll add as a caveat in 2021, I talked about it in a prior video, and I've really seen some good stuff on this, is that because of the ability to work at home and some of the dynamic that's changed with housing in 2021, the condos are becoming less attractive to folks who used to have to live near their work. And these metros where they were jam-packed in San Jose or San Francisco or Austin, Texas, or wherever it is across the country, if you have the ability to move 30, 60, 90 miles away, have a big house and a yard, and pay less than you would for that condo, that's something that many people are doing. They've got a home office, they've got a home gym, they've got more space, and the numbers don't lie. Condo sales in some of these areas, some investors that do research have alarming stats, that everybody's selling a condo and they're moving out. And it's probably not that dramatic, but it's something to consider when you're doing that. I think historically, single family residents do better price appreciation wise than condos do. But to each their own. There's certainly things that are attractive about both. I think that some younger demographics that like to live near entertainment and live near food and things like that are going to live in these city centers, and the condo lifestyle is quite attractive. But this is something that I didn't even touch on, which I just realized, and I'll touch on it real quick. If it's an attached condo, pricing is different. And it's not a huge difference, but it's slightly higher. The rate is slightly higher for an attached condo versus a single family residence. Now, there's some condo associations or planned unit developments where they're considered detached, and then the pricing's the same. If it's attached, if you're sharing any walls with anybody, then you're going to pay slightly higher interest rate. So that's that. Something to consider and something to think about when you're out there home shopping and you've been pre-approved and you know that you can buy something for in the neighborhood of $800,000. When you've put in some offers and those didn't work out, you said, you know what, rather than go into a worse neighborhood with this $800,000 pre-approval, I want to stay in the neighborhood I want to be in, but maybe I'll buy a 2-bedroom condo instead of a 3-bedroom house. Keep in mind, you've got to factor in the homeowners association, the slightly higher rate, and then talk to whatever mortgage advisor that you got pre-approved with to say, hey, if I bought a condo, what's my max? And really, it's hard to calculate because these HOAs vary, right? And so it's going to be, with an HOA of about 400, you're going to qualify for a purchase price of about 720. And then as this goes up, the pre-approval goes down. As the HOA goes down, the pre-approval comes up. So hopefully this was helpful. Any questions at all, please feel free to reach out. Matt, M-A-T-T, at mattthemortgageguy.com. Thanks for watching.